Hello, everyone. One of the reasons why I like to do videos, Greg, is is for myself. Obviously, try to work through these things, but also if anybody else gets any value. I if we're talking about the future, I think it's very possible that gold and silver could be signaling a huge deflationary event coming. Now, whether it is 20% of the population dying off, or whether it's like Evergrande, if Evergrande explodes and companies like them explode, that money's gone. It just goes poof.
Yeah. So I think what's going on in the environment is the economy has been trying to deflate really leading up into 2008. And it was never allowed to fully deflate, which is why the government came to the rescue by printing money. We didn't call it money printing because the average Joe, I think, knows from history that that's bad. So they create words like quantitative easing to confuse people. And then they start doing what only second and third world nations do, which is print money. And they stop that deflation. But to your point, Dave, yeah, gold and silver could be signaling that, but what is the Fed going to do? So that was my question back to you originally. Like, is Bitcoin going to drop below 30,000 or is it going above 60? It all, I think, ultimately ends with the Fed. And we're not part of that club, as George Carlin likes to say. So we're kind of guessing as to what they are going to do.
Well, if this is what I think, and I mean, this is where I don't know, because we could be in alternate universes, right? I think if the confidence maintains in the government, and even though everything that our government is doing and the Fed is doing is like a Mickey Mouse show,
yeah, it's a sitcom.
Yeah, sure. I mean, it's like Benny Hill, right? I mean, it's like, come on, why would you have confidence in that? But they do. It's like the emperor with no clothes. So as long as they have that, then yes, Bitcoin will go higher, the markets will go higher, other things will go higher. But the day that the child goes, why is the emperor have no clothes? And everybody's like, uh-oh. I think Bitcoin could go to 10 grand. I think that gold and silver could get smashed down, and housing could get smashed down. The stock market gets smashed down. And that's where you're probably hoping that you have a warehouse full of cigarettes and booze and Imodium.
And cash too, no?
Cash temporarily, sure.
Yeah, in that environment, you probably would want to have cash. So, I mean, one of the, I think it's prudent, and I'm not a financial advisor. I'm simply a trader. But if you listen to people that are way smarter than myself, they're not telling you to be 100% in gold and silver. They're telling you to be somewhere between 5 and 20% of your wealth in gold and silver. You should have some fiat. You should probably have some stocks, even if they don't make sense. And I know a ton of people personally who are becoming insanely wealthy on real estate right now. So, you know, there is a form of diversification. Who would have thought that we were going to have moratoriums where housing was, I think, trying to correct, and the government was like, nope, we can't have that happen, right? So, I mean, we even had Elizabeth Warren out one day after the collapse on Monday talking about we need a nationwide moratorium again because she's worried about the virus. I'm like, are we are people not waking up to the fact that that's probably not about health and it's just about finances? And how come no matter what happens, we always find a way to print money to keep people safe from a pandemic? I mean, how's that make any sense?
You know, it's real scary. Just to backpedal real quick, when Dave was talking about the Fed, I mean, didn't the Fed recently, you were telling me, Dave, or somebody recently get high marks or thumbs up for the job they're doing at large?
Did they? Yeah.
Can you believe that, Greg? The public?
No, I can, because it's not real.
I don't think the public was asked or something. What were they, surveyed or whatever, Dave? And they were like, yeah, they're doing a great job.
In my experience, the majority of people I know don't know who or what the Fed's purpose is. So maybe you're just asking people that have no idea what's going on. So they go, yeah, it seems like it's doing a good job. But
well, because the stock market's humming along, interest rates are real low. I can get a 30-year fixed mortgage, Greg, for 3%.
Yeah.
You know, let the good times roll.
Yeah, that's where we're at.
Yeah. And, you know, Tesla's, you know, still at 750 or whatever. Amazon's at, you know, 3,300 or 400, whatever it is. And things are ripping along, and people are making big money in real estate still. You just said it.
Yep. Yeah. And the one of the examples I like to use is Zimbabwe, because most people know that Zimbabwe is, you know, kind of a like a torn up country. You wouldn't want to live there, but their stock market goes up every single year. And sometimes it goes up 500%, but none of us would want to live there. It'd be an awful experience. And at the very lows of 2008, Jim Rogers, who's probably my favorite living investor, I remember him saying on CNBC, and I cannot find this video, and I am 100% sure he said it because I was like, holy cow. It was days before the bottom, and he was like, what's going to happen is they're going to print so much money. I could see the Dow at 60,000, and it will be bad for everybody. And I remember sitting there watching that going, oh, wow, like what? I don't fully understand what that means. It's exactly what has happened.
That's what's happening. Yeah. We're in, some argue we're in a melt up. There's a couple of services I follow.
Yeah, no, we are.
They were calling 3, 4, 5 years ago for 50,000 on the Dow.
Mm-hmm. We're crashing up. That's the Zimbabwe example.
And that's why people will continue to buy the dips.
And so far that has been the right thing to do because it always goes higher. Yep.
Until it doesn't work.
Yeah, that's why buying new highs is not a bad thing to do because it doesn't have to make sense to you. And that's one of the things you learn when you follow technicals is you have to shut your logical brain off. You have to remember too, most of the information that the three of us get from mainstream media it's already past news to smart money that's investing. Mm-hmm. So any of the information, that's why I stopped trying to compete on a fundamental level. It's not possible. You will always lose that because smart money, they hire thousands of people to sit at desks and you get insider information too. You know, some of these guys, banks specifically, are talking to the Fed on a daily basis. My brother has a friend who owns a bank in his neighborhood in Florida. The Federal Reserve visited them. I think this is like a month ago now, and said, watch for a crash in 6 to 7 months, and we need you guys to increase your reserves. Now, is that actually going to happen? I don't know. Am I trying to scare people? No, but that's a thing that actually happens, and I don't think my brother's friend, he has no incentive to just say that. The guy runs a regional bank. I mean,
well, to liken it real quick, they're running a playbook. They know what the playbook is, or I say to Dave all the time, they're driving the school bus. We're on the school bus, right? And so it's kind of like us sitting in the back seat trying to anticipate when and where the school bus driver, he's making the decision, the Fed, whatever, analogous to the driver. They're the ones in control. They know where they're driving. They may want to stop the bus, back up here, take a left, take a right. You know, it's like at that point, you got to be the leaf on the water, to use what Dave said earlier, because we're just on the bus. They're driving the school bus. They're making the wheels go round and round. We're not. We're not.
Yeah, and all I'm doing as a trader is I jump on that bus and then I just jump off at stops really quickly. That's all I'm doing because I don't like the direction that they're headed. And
you use your charts to guide you, to at least give you some sort of an intelligible inference based on time, based on volume, based on price.
And I really think the dollar is a great example where it's sitting in a positive bullish pattern. But when the entire globe is printing trillions of dollars, you would think the currency would go down. You would not think that gold and silver would come under pressure, but charts are telling me that that's not the case. So it's making me wonder, while Norway raised interest rates, the Fed keeps talking about tapering. Are they actually going to do it? Are they going to? But the dollar right now is indicating it wants to go higher, which would make me believe that the Fed is going to allow markets to come in a little bit. And that, I believe, also kind of ticks a couple boxes because it gives them some credibility because they keep saying everything is transitory, yet nothing comes down. So if markets were to simply move down another 5 or 10%, I think we could, or people would be, oh, maybe it is transitory, and maybe give the Fed a little bit of credibility. They can also ride to the rescue again and print money and let their friends at the banking institutions know before they're going to do that and what date they're going to do it on. Yep.
And banksters never lose. It's one big club, and you and I aren't in it.
Yep. So all I do, I try to do my best. I take little pounds of flesh here and there, and I'm happy with that. The alternative is I just put my money into a 401k. I don't look at it, and then I hope that these guys run the economy know what they're doing. And I like to have a little bit of control.
Amen on that one.
Yeah. And you can do both, right? You can be a trader and have a 401k. Don't always have it. Only the Sith deal in absolutes. There's my Star Wars quote for the day.
Yeah, these are crazy times. And I mean, if you can think of a scenario, it's possible today. It's possible because it's not just the US anymore. And see, that's the difference, is the rest of the world is coming up. And so it's like water
Parity
coming to a level.
Yep.
And that's what we're feeling in this country. We're feeling like we're being dragged back down to where the rest of the world's catching up. It's not World War II, where we had all the gold and we had basically 25 years of unlimited spending, and that's what our country got used to.
Yep.
Now we actually have to compete.
The sad part of what you just said, the United States was like 50s, 60s, I think leading up to the 70s, was the largest creditor nation on the globe. And now we're the largest debtor nation in the history of humanity.
That's right.
Yeah, I mean, the bottom line is if you have children, what are you going to tell your children to do today to actually compete against, Jiang Ming or, Abu, whoever in Africa or, whatever. I mean, these people with technology the way it is, they're going to be able to compete with you. And like Dan knows, working, somebody from India, right? Somebody from India is willing to work for a bowl of rice.
Yeah.
Well, I know people that literally work 14, 15-hour days, like every day, where I'm at, and without alluding, too much further, and they're willing to do it, if you know what I mean. And if you
live under that bridge behind you, right?
Yeah, exactly. And I mean, but that's where we're headed in America now. I mean, it's commonplace now. A lot of people that are working 10, 12 hours a day or more. And
just to maintain. Yeah.
You nailed it. I was going to say, not to get ahead. Like in our parents' time, my dad would put in a ton of overtime to get ahead, right? Yeah. To save extra money, whatever.
Which you could
That's
do.
not the case now.
Yeah.
That's just to pay the electricity bill and keep buying groceries and get the rent covered. That's it. Yeah. Forget vacation or anything else.
And they're using their credit cards to pay for anything that's not being covered by that.
That's right.
One of the economists I really like and really opened my mind to what's going on today is Peter Schiff. I'm sure everyone listening to this has heard of him, but he talks about that a lot, where in the 50s and 60s, you only had to have one source of income coming into the home. You had a car, you could go on vacation, pay for it. You weren't in debt. And now today you have to have both parents working. Most people are carrying insane debt loads, which means they're not getting ahead. They're behind. And working overtime might be something you have to do, take time away from your family and friends just so you can feed yourself. And that's not being talked about. Not only is it not being talked about, I think we're being lied to and saying that that's not the case. So the problem with massive inflation is it's a hidden tax. And it crushes middle class. It lowers the standard of living. And that's how I found gold and silver originally. And I've got like a minute.
Yeah. Well, that's where I'll just say just the thing that's going. That's why a lot of people around the world aren't having kids or getting married today.
And what's interesting, it's super interesting, especially if you go to, and I like psychology and I just like following what people are doing, sociology, like Japan. For the last few years, they've been selling more adult diapers than kid diapers. And the government's actually spending millions of dollars to try to get teens, to hang out with the opposite sex. They don't want to do it. And they're watching their birth rates go through the floor. But I think no one wants to talk. Like my dad, who's in his 70s, has said to me repeatedly of late, he's very worried for my children's future. And, he's never said stuff like that before. And I'm watching polls, et cetera, that show that Americans are less optimistic about the future versus basically any other. It's most people don't have a good view of the future where the U.S. is headed.
Well, Greg, thank you very much for being with us. And listen,
Absolutely.
Dan and I have already come up with the answer on that. It's called carbon-free living.
Yeah.
So we did a video on that. That has all the answers.
Okay, cool. I will watch that. I haven't watched it yet. No,
you'll get a big kick out of that one.
Yeah, it's not a pleasant video, but it's probably where we're going.
Okay, I'll take a peek at that.
Okay, and listen, we got to do this again because I think I want to follow up with you on the volatility. So maybe we can do it in a week.
Yeah, sure.
We see what happens this week.
Yeah, sure. Yeah, I think this week will be very telling. See kind of where we end up. So
yeah, because
I think we'll have some direction.
Yeah, and we're finishing up September, going into October, which is the teeter-totter time frame. So
yeah, September, October, typically down months, or they come under pressure. That allows the Federal Reserve to come to the rescue. You get a Christmas rally and rinse, repeat.
Well, Greg,
Exactly.
I know you have to go. Dan and I are going to stay and continue the conversation. Cool. But thanks again, my friend, and everybody go to Silver Liberties.
Thank
Links
you,
down will be below.
Absolutely.
And pay the $20 and try it out. And like Greg said, well, I don't know if he'll give you your money back, but
yeah, if you guys are honest, I believe most people are honest. I don't think most people will lie to you. If you come in, take my seminars, you don't learn a single thing, just email me. I'll give you your money back.
Yeah, well, I'm biased. I would find that hard to believe. They wouldn't learn anything. It's just my opinion, Greg.
I think they'll learn something. And then if you can learn something, I guarantee you're going to make your $20 back. So I'm going to leave it there. Have a great day, guys. Thanks for having me.
Thank you, buddy.
Welcome. You are welcome.
See ya.
All right, Dano. What are you thinking after this conversation?
Well, I mean, I guess long-term overarching direction, it seems clear. Obviously short-term to midterm is a different story. We're heading into October, like you just said, too. I would have expected by now that we would have been banged over the head again in September. That hasn't happened to the degree probably I would have thought of. And now we're headed into October. So, and he made a good point before he just signed out, which is, maybe October's the month where there's a bang down so that the Fed can do their knight in shining armor dance again, just before the holidays, right? To then spur it back up again, right? And get everybody feeling good again so that they can go into pre-Thanksgiving and then pre-Christmas, right? Slapping the plastic down, right? Feeling good, right? Get another burst out of the economy, right? So, they're running their playbook. It's a playbook. It's literally a playbook.
Well, I think if you're a Patreon member and you're inside looking at the rationale on this, one of the things that he was saying, and I don't know if he said it today as clearly as he did mention it, but not as clearly, is with the stock market the way it is if you wanted to play the volatility play, now is the time to do it, because we're close to all-time highs. So that if it screams higher and you played the volatility play, you were wrong, and you can get out without a lot of damage, right? Mm-hmm. But now, with it being September, October, with the markets historically correcting, even though you could argue it's not going to, now would be like Michael Burry's doing. Now would probably be a good time to do it. And if you're wrong, you're going to know within a month if you're wrong. Because the bottom line is if you trade, there's a risk you could be wrong. If you don't want to be wrong, then stay in cash. And even then, you could still be wrong.
Absolutely.
When you go to buy your French fries and they're now $2 instead of $1, you're losing money.
One of the things Greg said, which is always true, and sometimes I lose sight of this real quick, the experienced traders, though, or whatever, and the pros don't, is, who's on the other side of the trade, because that's part of the markets, guys, and trading in general. You're sparring, I liken it to sparring. You're putting on your gloves and you're getting in the ring and you're sparring financially. Okay. Maybe you're not sparring physically, obviously, but on the other side of that, chances are it's a pro or it's a hedge fund. Okay. And they're in good shape and they're fast and they've been doing it a long time and they know the tricks of the trade. You know what I'm saying? Right. And I think Dave said it earlier, or Greg said it. You got the duck and weave and the quick bob, like Tyson used to do in his prime, right? And then all of a sudden he's on you and he's delivering a deafening liver shot. It happens in the markets all the time. All of a sudden you make a trade, you think you're whatever, and you really haven't put your time in, and they're on you like a wet blanket.
Even if you put your time in. I mean, that's where
100%, even if you put your time in. But I'm saying if you don't put your time in, it's inevitable.
And that's where patience is probably most critical, because whether you want to accept this as true or not, I mean, the moral of the story is buy low, sell high. But most people buy high and sell low because those are relative terms. What is low? What is high? Well, that's the key. And if you can develop patience and also techniques, like I had mentioned, options, the beauty of options in the right way used is it's like if you're running against Usain Bolt and he lets you start, you're running a 100-yard dash and he lets you start on the 50-yard line, you've got a better chance of winning. If Mike Tyson says you can use both hands and I'm only using my right hand, you're still going to get hurt, but you stand a better chance. So anytime you can develop a technique or a trading strategy that gives you an advantage, your odds go up of winning. And that's the key.
Yeah. And that's where putting your time into Greg's point and doing your homework and learning. I mean, learning's not easy, particularly the older you get. It takes action and it takes brain power and it takes energy. Sometimes you're tired that day. You worked all day. You've got family issues, on and on and on. But that's where staying focused and being diligent about constantly, learning and staying up to date. As with anything, I read something the other day that's basically said that it talked about change. We're in a point in time in the 21st century with technology, AI, and all that stuff, where it's important to not only be able to learn, but they said it's important to basically learn, unlearn, and relearn. And I believe that and it's a constant cycle, learn, unlearn, and relearn, meaning you've got to be open to change, right?
Talk about your parents are giving you obsolete advice.
Well, you nailed it. I mean, the days of not having to do that rinse and repeat pattern that I just described were in our parents' lifetime. They could graduate from high school or whatever, get a decent paying job, be there 35 years or whatever, and expect to retire with a decent pension. They didn't have to be subjected to constant change, pounding at them all the time. We are. And not only our generation, but our kids. I mean, we think we're under change. We ain't seen nothing yet. This is only the beginning, in my opinion. This is only the tip of the iceberg.
Well, as an example, and we're going to find this out. We don't know. We all have our opinions, but like Andy Hoffman, he a couple of years ago, he was a huge gold and silver guy, and he went, got to go to Bitcoin, and everybody was like, "You traitor, you traitor." But the bottom line is, he's been right. Maybe there's a new paradigm. I mean, and there's a lot of people who think cryptos are a scam. It's going to zero. Time will tell. Time will tell. That's what they were saying about the .com 30 years ago. And yeah, some of it went to zero, but a lot of it changed the world, right?
Mm-hmm.
So I think
absolutely.
So the mistake I made is that, and this is the danger of going all in. If you go all in and you're right, you're a millionaire. You go all in and you're wrong, you're broke.
You could be busted really bad. And that's the danger. Yeah.
But taking a percentage of your portfolio and saying, I'm going to put it into whatever you decide is a risk, but a potential victory. These days and age, you almost have to play these bets.
Well, you don't have a choice. We already talked about it, and I got to go in a minute. But the interest is at zero with the banks for all intents and purposes. So savers are, just to recap real quick for those not familiar, are totally punished, right? You can't save money anymore because, short term you can. And it's good to, what I would say, have an emergency fund, ideally a 6-month emergency fund to cover expenses.
And that doesn't mean going to debt. That doesn't mean Dan's not saying going to debt.
No, I'm saying having cash.
Put the money to work.
Yeah. Well, but for the emergency fund though, That's a double-edged sword. I mean, ideally, the experts say you want to have a 6-month emergency fund. What does that mean? To be able to cover your core expenses for 6 months. If you lose your job, whatever stuff hits the fan, you've got 6 months to cover the rent, pay the electricity bill, and buy food. Okay, you're not styling, but you're keeping the basics in play right now. Does that emergency fund involve putting it in the market? On average, I would say no, because you could lose it, right? But you're not going to get interest on it either, right? You're not going to get interest. And, you may want to refresh it over time to account for the inflation chipping away at it. But the bottom line is anybody in cash, if you think you're just going to, put it under a mattress, 100 grand or whatever, and leave it there long term, yeah, you can do that, but be prepared to lose. Basically, they're telling us 2 to 3% a year. It's probably more like 5 to 10 minimum, or 15% a year now. Inflation.
Well, here's something
right?
else.
So
here's something that
can't
nobody
afford
ever
to do
considers.
it long term.
Well, here's
It
something
kills your purchasing power.
There you go again. Here's something nobody ever considers. Lower your overhead. Lower your nut. Oh, I can't do that. I have to have a roof over my head.
No.
Well, there are
You're right.
always alternatives to lower your nut. And you lower your nut, and all of a sudden, you don't have to kill yourself just to, like that rat on the treadmill.
Well, to add what you're saying real quick, and Kiyosaki says it all over his book. He says it's not what you make, it's what you keep too. And part of that keeping is what you just said. You need to think long and hard what's important to you, the lifestyle you think you want, and what you spend your money on. And, do you tend to spend your money more on, assets, things that generate cash flow, or like the bulk of the middle class, if not all, and the poor, on liabilities? I mean, most people aren't even clear on what an asset versus a liability is. And that's why, including our government is in my opinion, shape that they're in. Because most people ask the question, what you alluded to, Dave, is I need more money. How do I make more money right now to cover my expenses? When instead they should be stepping back and asking, how can I keep more money of what I'm already making, right? Maybe I don't need the 4,000 square foot house. Maybe I don't need two $40,000 cars sitting in the driveway. Maybe I don't need those 2 or 3 vacations a year at 10 grand a pop for a family of 4 that I now shove on the credit card, which is called bad debt. Why is that bad debt? Because the debt you pile up on your credit card, folks, is not generating any cash flow for you, and you're paying 20%, 18% on average interest rate on it. So that $1,000,
a mortgage is a potential noose around your neck.
Well, a mortgage on a primary home, to be specific, is absolutely a noose. What do I mean? There's a thing, folks, called a balance sheet.
Any property today is a potential noose.
Well, what I was going to say real quick is everybody should be familiar with basic accounting. They should be familiar with what a balance sheet is and an income statement. I'm serious, okay? They don't need to be a CPA, but they need to know. So a balance sheet, real quick, is line items of what are your assets, what are your liabilities. Liabilities are what you owe. They generate no cash flow. A mortgage, to Dave's point, if it's a primary residence, for sure, is absolutely a liability. We're taught in this country that a primary residence is an asset.
Yeah. What about if you own the strip mall? You own a strip mall and you're not collecting rents, or people are going out of business and you don't have anybody in there.
It's traditionally
you have a multi-family property. You have to pay your mortgage, but nobody's paying your rent. That's what I'm talking about. If you have a mortgage, it's a liability.
Okay, but
Government
not always.
raises their taxes 3 times. That's a liability.
Okay, so my answer is you own a quadplex and you got 4 renters in there. Up until a year ago or so, traditionally, if it's bought for investment purposes and you're renting it out and it's generating cash flow, say $200 a unit or $800 a month, that's absolutely an asset without a doubt. Plus, they're paying down your mortgage and it's generating cash flow for you. But to your point right this second, you could argue liability, because the government has intervened, made a stupid rule of basically, well, because of the situation we're in with the pandemic and everything, nobody needs to pay their rent for a year. So now you've
That's
just put
using
the
new
landlord-
information. That's where you're not, the traditional theory has been invest in property. You can never go wrong. There'll always be
Because
somebody
it's always
there.
But it's always worked because
I know that.
everybody needs a roof over their head. They always have since the beginning of time. But now that the government has artificially, in my view, intervened and made certain rules like, hey, you don't have to pay your rent for a year. Okay, that's great, guys. I know you're looking out for the renters, and I'm compassionate. I'm not looking to throw people out on the street. But what about the landlord though? Who made the investment, who went into debt, $500,000 or $1 million for the quadplex or the eightplex or whatever you want to call it. Who's the landlord? Who's providing a roof and shelter for these renters so that they can live? So now you're stuffing them in the face. You're punching them straight in the teeth with the proverbial straight right, telling them that these guys don't need to pay for a year. What's the poor landlord supposed to do? How long can she, as well as cover their own basic living expenses, do that for? Now they're underwater. Now you're sending them into bankruptcy, right? I don't see the government paying their rents that they're not collecting. But
what about the business owner who put money into a business like a restaurant or
spot on,
or
Same
a
thing.
retail store,
Same
and
thing.
all of a sudden
Same thing.
you have to close.
Telling everybody, yeah,
you can only have one table.
You can't open up. Yeah, you can't open up. Tell the bar owner or the small restaurant owner, you can't open up for 6 months because I told you so. Okay, then, yeah, it's disgraceful. Okay, great. So what is this guy going to do for a living? He's going to become a plumber on the snap of a finger, or change his profession overnight. So how's he going to pay his rent, guys, and buy food? And if he's got a couple of kids and stuff, you've just subjected him to a world of pain.
We talked about risk. So when we're talking about trading, and you might be going on the other side of the trade with Tyson. So now the government's saying, hey, now you get to fight Tyson and Holyfield simultaneously.
Exactly. Good luck. I hope you're Bruce Lee.
Yeah.
Because if you're not, you're in for a world of pain. You're taking a beating, a beat down.
Yeah, and that's where I come back to lowering your nut. If you lower your nut, if you get out of debt and you don't have the risk and exposure, you might not be getting the potential gains that you want, but you're also not exposing yourself to the potential losses.
So
liability.
To use a nice business term or project management term, and we've said it many times, that's called risk mitigation. Absolutely. You're stepping down your risk, consciously stepping down your risk. You may not be living the lifestyle you want and stuff, but that's why it's called risk mitigation, right? Because of the unforeseen stuff that could happen and all the variables more than ever before that are in our world and marketplace, right? Where you think you're covered, but something comes out of left field. You covered his jab and his right cross, but he stepped in and delivered a left hook to your jaw. You didn't cover that one. And that's where risk mitigation comes into play, right? That's where you need to maybe step back and keep your guard up. That's what Dave's talking about, because that's where we're at. That's where we're at. I mean, you got to tread lightly now. And there are some people though making big money, like Greg said, even regular people. But you said it earlier though, Dave, too. They're swinging for the fences, and some of them are hitting it, but the bulk don't hit it. And if you do make that huge bet, and you're wrong, like you just said, Dave, and it goes against you, what's the average 401k? 100 grand or something? So if you bet that whole thing and you're wrong, I mean, you could be looking at 10 or 20 grand all of a sudden, poof.
I think more so than ever, Dan, more so than ever is, I think it's more important than ever, if you have an investment, is as it climbs the return, you got to take money off the table as it's going up.
I totally agree. Way. No, totally. Because sooner or later, this thing's going to reverse bad. The tail of the dragon, the lion, whatever analogy you want to use, eventually it's going to turn and it's going to come back at you sooner or later. I mean,
so now they're starting to say in Bitcoin, oh, Bitcoin's going to go to $400,000 next year. Don't take it off if it goes to 100. Maybe information change. Maybe I need to make the plan. Maybe I need to modify it.
Yeah.
But the bottom line is this could all fall apart tomorrow and nobody would be surprised. So everybody will be like, well, the signs were there. Just like 1929, the signs were there. We just were partying and dancing on the Titanic, man.
Yeah. Yeah. Nobody knows when. I think it's going to go for a little longer. I really do. Just because they
could.
And here's my rationale real quick before we part. I think it's going to go on for a little longer just because the powers that be in setting up the new system for the grand reset, twofold is at least happening. While they're setting up the system in the background and making the finishing touches in terms of, the old SWIFT system and all that, and the BIS and all that, and bringing in certain cryptos for certain use cases. We're going to a new financial system. Absolutely. But while that's happening, they're also, the elite or whoever you want to call it, is siphoning off wealth as well at the same time. And they're using the middle class essentially to siphon it off and to fund a lot of this stuff, right? And get rich at the same time. But when that second comes, when they're done, Dave, in my opinion, when they feel that the timing is right, and the system, if you will, the new one is in place, it's going to be just a flick of a switch at that point.
I think we're there. I think we're there. And I don't think so. Please. Let me finish, please. I don't think so. Yeah, we are, because here's your mistake. You're thinking as the Westerner. You're ignoring the Asian influence, the Eastern influence, and that's what Afghanistan marked. Afghanistan marked the Westerner getting their ass kicked. Okay. Saudi Arabia and Russia marked the Westerner getting their ass kicked. Okay. These are milestones, and if you do not recognize these milestones as danger signs, then you're going to get burned.
Okay.
I think I think it's the proverbial trying to pick up a nickel in front of a steamroller right now.
That I don't debate, but what you missed, what I was saying is, when I say the powers that be, I'm talking, and I should have been more clear.
Yeah, you're saying the party's going to continue. I disagree. I think
it is. I think it is because they're not.
I don't think we're going to 50,000. I think this is it.
I didn't say we're going to 50,000, but I think we're close. I agree with you that we're close, but I don't think we're quite there because they're not quite ready yet. But the millisecond they're ready, it's going to be a flip of a switch, and most people are going to be caught off guard. Now, what
I'm saying is housing's not going up higher. Stock markets aren't going up higher. Commodities aren't going that we can invest in are going to the moon anytime soon. So I think now is the time. I think now is the time to unwind your nut and get someplace where you can ride this storm, because the storm's coming.
I agree with that totally.
We've got 30 seconds, pal. So I'll give you the last word.
Yeah. So again, in a nutshell, all inclusive. When I said powers,
Dan, you've got 30 seconds.
It's all these forces at large that are global in nature. And when that time comes, which will be soon, it's going to be a flip of a switch and most people will be caught off guard. So we're essentially on the same page.
Well, as we talked about with Greg, you notice the big boys aren't in there right now. For all you know, they're already positioned. It's musical chairs. They're
they are.
They're in the chairs right now.
They are positioned. They're always
Music
a year
is
or two.
ending in 3,
2, 1. They're positioned.
1. Peace.